I'd like to teach the world to sing in perfect harmony. I'd like to buy the world a Coke and keep it company. Coca-Cola. Who doesn't like Coca-Cola? Of course, it's been many, many years since I've had one. When I decided to get rid of the fat boy pizza breasts and the blubbery gut, one of the things that didn't make it was sugary drinks. So I do not drink any sugary drinks, but I do like dollar bills. So let's look at the Coca-Cola. Coca-Cola. You know who loves Coca-Cola? That's right, our friend Warren Buffett. In fact, it says it right there. Warren Buffett loves Coca-Cola. In fact, he is the single largest shareholder in Coca-Cola. How about that? I was looking at the old tipranks.com, and on the 16th, along with Walmart, March 16th, Coke also pays or also goes ex dividend. There it is right there. Coca-Cola, ticker symbol KO, ex dividend date March 16th, and then the payout date will be a couple weeks later, April 3rd. Hey, just like a few days before your birthday. That's right. 46 cents a share, along with a 2.97% annual yield based on cost, and it's rated as a strong buy over at the tipranks.com. So let's take a closer look at the Coca-Cola. Let's see what the summary says. What have they done over the last month? Over the last month, they're down 1.62%. Last 5 days, down 1%. Today, down 0.31%. Some of the authors over there saying things like Coca-Cola, consistent value for long-term investors. Sounds good. Coke versus Pepsi, which is the better buy for dividend income? I think they're both great buys, and we're going to be getting in on some Pepsi soon too. So if you look at the ratings they're in the consumer staples industry, soft drinks, ranked in industry 4 out of 17. So if we take a look at, I believe Pepsi is like 3. So Coca-Cola over there in some other country is ranked number 1. Then we have, there's Coca-Cola 4. So Pepsi, where's Pepsi? Oh, there's 7. There's Pepsi at number 7. So Coca-Cola has 1 green score out of the 3. So these orangish looking scores, those are considered holds. And then the green is considered a buy. And then a red is considered a sell. So Coca-Cola, hard to go wrong with it. And I was talking to you about this earlier with the Walmart purchase, and then also the little kick in the pants, little juice of the return through selling a covered call on top of collecting the dividend. I considered it a foundational element of my financial moat. So I've got my castle of love that I'm building, and then I want to surround that with a financial moat, and I want to fill that with the best companies in the country that pay dividends, and then also that I can collect premium on through selling options. So Coca-Cola is on that list, and they're on the hot radar today because today is Tuesday, March 14th, and in order to qualify for that dividend, we should own that thing no later than tomorrow. So let's go ahead and own it today. If we look at the dividends, well, let's go back here. Let's go back to Coca-Cola, click on the dividend tab, and we'll see that they have a 3% yield. Now that's higher than it said in TipRanks, Bart. That's because the stock price is going down a bit today. So that adjusts. Again, we talked about it before, but we'll talk about it again. It adjusts, and it's based on its dividend yield on cost. So if you pay, $60 a share for Coca-Cola and they're paying 46 cents per quarter, right? So 46 cents times 4. So that's $1.84 is what they would pay you based on that 46 cents a quarter dividend. And if we paid $60 for the stock per share, we would have a 3% return, 3% dividend yield. So there's our dividend date. They've got a very great history as far as the number of years they've paid it and the number of years they've grown it. Okay, so they have 60 years of consecutive dividend payments, and they've also grown that dividend for 60 years. So they get an A plus on both. And if we go down to, you can see their quarterly payments, 46 cents a share. So that's a raise from just last year at 44 cents a share. Year before was 42, 41, 40, 39. So those are two nice back-to-back 2-cent raises in a row. So from 21 to 22, they raised it 2 cents a share. And from 22 to 23, 2 cents a share. So they're like, well, 2 cents, that doesn't sound like much, but 2 cents on 44 cents, what's that? Let's just do easy math. 2 on 44, that's a 4.5% raise. And I don't even have to go there work at the Coca-Cola like my buddy Mark Replin does. He works at the Coke, has worked there since right after college. So that's what we're looking at. We want to be able to collect the dollar bills from the dividend, okay? And then also collect a little dollar bills, y'all, from the premium on a covered call. So if we go on up to the Robinhood, and let's see where we're at now. We're at 59.66. It had a low today of 59.61. I think this thing is pretty much a buy anything under 60 right now. Now, again, we know we've seen some of it live. We have. It's been scary. It's been a train wreck. We've seen some of the reasons why you should not follow any of this as investment advice. This is for entertainment purposes only. So let's give it another second to go back down a penny, and then we'll buy it. Oh, you're basically a kook. You are a kook. Uh-huh. You are a kook. So if we put in a, oh, it's dropping as we speak. Let's just take it at this. No, it went back up to 65. Bart, just get on with it, would you? Get on with it. Let's just go with a market order. No, I'm going to talk another few seconds, and then we're going to come back, and it's going to be down to 59.64. So let's just revisit SPY real quick, see what it's been doing. You saw me go in on the credit spreads at a 395? I think it was a 395/397, and it's worked in our favor since then. We don't want to see SPY go down. We just don't want to see it go up and crash up through that 395 strike price. So you just missed it. You just tuned back in and you missed it, Bart. So we're going to go ahead and put in just because I'm being stubborn, I'm going to put in a limit order on Coca-Cola, and I'm going to go down 2 cents. Oh, now it's going up. You're not even going to get filled. We go to $59, allow this order to execute during extended hours. Sure. So we'll put this on right here at 59.54 just for fun. See if we can't collect another or get a nice little discount of $2 bills on that. And what we're doing is we're placing a good for the day. So just for this trading day, a limit order. Hey, we need to get in on there. We need to get in on that. So did we fill at the 64? We should have, because we could have. Look, now you've missed a couple more dollars just by being a crumb bum. Now we can trade it if we want. So let's look at trading a call. Let's sell a call. And let's look at, I was thinking, like, what if we made this into a monthly payer? So if we went out 1 month and we went to, let's see, we don't really want them to be called away, right? So what if we went to $62? I mean, we'd only collect 25. We'd collect $25, but what if we were able to do that a month, right? So if we look at their dividend, they're going to pay us 46 cents a quarter, right? So 46 cents a quarter times 100 shares is $46. $46 bills times 4. 46 times 4 equals 184 on the dividend, right? On the dividend. Let me see. What did this say? Okay. Now go back. Let's go back here. And if we collected 25 cents a share times 100, so $25, and we were able to repeat that every month. So $25 a month. Let's bring up the abacus. $25 a month. You know what? I can't resist buying this at 59.61. Wasn't it just at one? Yeah, there it is. You're a kook. You are a kook. That's okay. Oh, look, it popped up to 62. Oh, that's okay. Even almost 63. Yeah, 63. How dare you, Robinhood? Well, it's better than 64, so just count your blessings. So let's go back to trade the Coca-Cola, sell, call, and we are looking out 31 days to April 14th, 62 strike. Okay, so it's got a 20 delta, so only a 20% chance of these shares being called away because we want to keep them. Now, we wouldn't be entirely upset if they were called away and we got, $2.40 profit per share. So that'd be $240, but we're not counting on that. We want to look at this as how do we juice their 3% yield? Okay, so if they're at 3% on their dividend yield, so if you just bought that and you did nothing, you would get 3% on your money, but it would also grow every year, as we've seen. It looks like it's growing around over 4% the last 2 years in a row. So a nice little raise. And our friend Warren Buffett probably has to approve that. He might be on the board. So if we were to get $25 a month on top of the $46 a quarter, what are we starting to look at over 12 months? Okay, so we know that we'll collect $184 from the dividend for the year, but if we collect $25 a month for an entire year, that's $300, right? 300 in premium. If we have 300 in premium and then we add back our $184 in dividends, now we're at $484 of actual money in our pocket. And then we paid 59, and look at the stocks going down. We paid 59.63, just about $5,963. So if we take this $484 that we've collected through premium and dividend, and now we're holding the stock through this whole time and we're selling a covered call every single month, right? And then we divide it by the investment of 59.63, then now we're at an 8.1. We're at an 8.1% return on our capital on a financial moat type of company, Coca-Cola. So that's 8.1% just by juicing the returns. Now, it doesn't mean that they won't be called away at something like the $62, but it does mean that we will profit in the meantime if it did. So we would then also get the spread between what we paid and the $62 a share that it would sell for. So let's just go ahead and see if we can get $25 on this. In fact, let's try for 27. See if we can get $27, and it'll be a 31-day trade. Covered call, Coca-Cola. It's been placed. We'll leave it there because as this rises, and it will, it's currently at 59.60. As that ticks up just a little bit, this will fill, and we'll put the $27 into our pocket. And then I'll run a spreadsheet, and we'll keep track of all of these together and then all of them individually. So as we look to build a wealth snowball with more and more cash flow plays compounding together over time, we need to know how those are doing, how they look on paper, because the share price, we have nothing, there's nothing we could do with that. Just like if we go back here, if we look at what's going on in my portfolio just over the last month, it is, it's down a bunch. I mean, today it's up 2,800, but it was up almost 12,000 earlier today, but it was also down 15,000 on Friday. So we can't control the share price, but we can contribute to controlling the cash flow, right? We can get the cash flowing into our pockets, and that's where we want the cash to be. So there we go. Because if you want to buy the world of Coke and keep it company, you should do that with Coca-Cola. So there you have it. Make sure you are a subscriber, like the video, comment. You could see if you're wondering, if you've watched some of the past videos about Signature Bank, still got those buy to close close out those puts on the table because SBNY is not trading again today. And I'm bracing for impact in case that does go against me. The SPY trade we made just, an hour ago is already 90% in the money. So we like that. We picked the right side of the SPY. In fact, we've gotten all of them right. All the trades have been right except 3. But those 3, I've done the math. Beep, boop, boop. When these trades go wrong, the pain is 3 to 4 times more painful than the joy of getting them right. Does that make sense? But I also don't have FOMO. I don't get very emotional. It's good. This number is just going to trend up over time. I promise you it will fluctuate, especially this year, but it's going to trend up over time. And I plan on being here with you as we share this wonderful journey together in the world of finance, stocks, options, and dividends with your new best friend, Bart Divvy. Thanks for checking in. See you in the next video.